Hello, everybody, and welcome to Commodity Culture, where our goal is to make you a better investor in the commodities space. My name is Jesse Day. Before we dive in, as always, standard disclaimer, nothing here is investment advice. Do your own due diligence. We bring you the information. You do your own research. And today's guest is the CEO of Dolly Varden Silver, a mineral exploration company focused on advancing its 100% held Kitsault Valley project located in the Golden Triangle of British Columbia, Canada. It's Shawn Khunkhun. Great to have you back on the show.
Jesse, thanks for having me on.
Yes, we're going to dive into the silver market today. We're going to talk about when will silver break out to $50, the gold-silver ratio, so much more. Let's start off, though, by stepping back, and I'd like to ask you, what are the main themes and trends you're currently watching as we sit here today in the silver market that you think more investors should be paying attention to?
Well, listen, one way to look at silver and is to say that in the last 100 years, 98% of that last 100 years, we've been in a bear market for silver. We've had two moments, 1980 and 2011, where we went into a bull market, but it was very short-lived. And so, if you look at that last 100-year period, investment demand for silver has been at 30% of the silver universe. The other 70% is going to industry. So during a bear market, we've had a 30% investment demand. During the bull market, what drove the bull market was investment demand. It was investors going out. It was on the back. If you go back to 1980, the gold was running from $35 an ounce to over $800 an ounce. The Hunt brothers had cornered the market, and the price of silver spiked. It was not based on photography or the big industrial components and usages of the time. In 2011, the price spiked, the move from $4 to $49. Again, it was on the back of investment demand. So my point here is, if in the last 100-year period, 98% of the time we've been in a bear market. Okay. And during that bear market, we've had 30% of the silver market consumed by investors. But we've shown you that when we get into a bull market for precious metals, and we are unequivocally in a bull market for gold, it's hitting record highs in all currencies. And we know silver's got beta, and we know silver will outperform. It has every time. It's coming. It's inevitable. But there's one difference, Jesse, this time. And the difference is, by the end of 2025, so this is 15, 16 months from now, industry is going to consume all of mined silver. So the 850 million ounces that we mine as an industry on an annual basis is going to get 100% consumed by the growing industrial demand for silver. So in the last 3 years, we've had 250 million ounce deficits for silver already. Industry is growing usage. Investment demand will come. It's been 30% during a bear market. It's going to be a lot higher than that. It would be 2, 3, 4 times that during a bull market. And so we're setting up for the greatest squeeze in the history of silver, and it will unfold by the end of 2025. But we are already seeing, as going back to 2022, 2021, 2023, the 250,000 ounce deficit is here, and it's growing, and it could be 500 million ounces this year. I don't always believe in the institutes and the reporting that we're getting. Is it accurate? Because really, the market is not as transparent as it should be, and it's changing. With some of like the Shanghai Metals Exchange, and we're starting to see more price. The paper price, the digital price represent more of the physical market, but it's still got a long way to go. So, if you want me to put a calendar on it, Jesse, I think that look, we've seen the price move from $16 to $30 over the last couple of years. I think we're going to see a dramatic move before we get to December 2025. I think the price is going to get way ahead of that. Is it $40? Is it $50? I think as we go into 2026, we will be trading at all-time highs.
Fantastic breakdown there. I do want to touch on gold. You brought up, of course, it reaching new nominal all-time highs. Rick Rule has trained me to say that in and reaching all-time highs in a variety of currencies as well. Not a ton of mainstream attention yet. We've seen a few articles here or there. Fortune magazine gave a pretty favorable take on it. We haven't really seen the talking heads on CNBC start perking up and paying as much attention as they probably should be, especially when we consider the current macro setup around gold just looks absolutely phenomenal. What are your thoughts here? When do you think we'll start seeing the mainstream and your average person on the street kind of perk up and pay attention to what gold is doing? And could that kind of fuel the next leg up in the bull market?
Well, it's interesting. I was sitting down with a friend, a mentor, a partner, Frank Juicer, yesterday, and Frank he's one of a handful of investors, Lundin, Friedland, Lassonde, who have you know really been very successful, serially successful mining entrepreneurs. And Frank was telling me a story yesterday about writing an article for a mainstream publication about why gold should be relevant. And this was 7 years ago. And it was very, very difficult for the story to get picked up because it was so controversial, talking about things that are talked about on CNBC today, are talked about in the mainstream press. So I think we've gone from, in the last 7 years, where it would be taboo to talk about some of the, reasons to own gold, where they're starting to become mainstream and acceptable and recognized. But look, I think as long as we're in an environment where we've got stock indices at record highs, other asset classes at all-time highs and going higher, I don't think gold necessarily needs to be front and center in the conversation. It reminds me a little bit, and again, I'm limited to my 43 years on this planet and my 20 years in investing in mining. I'm limited to my own experience. It resembles 2007 a little bit to me, where you had stock exchanges, real estate prices, and gold all trading at a pretty healthy value. And it really wasn't until the relative value of gold in relation to these other asset classes was showing strength. Even though we saw the price of gold fall in 2008 from a January high of when it first broke 1,000 for the first time ever to a low of $680 in Q4 during the GFC, during the financial crisis. So gold was down, 30%, but other asset classes were down 80%, 90%. So to answer your question, look, I think until we start to see some other asset classes fall, I don't think gold necessarily needs to be talked about because there are many, many things that are outperforming gold. The crypto community, the Bitcoin community can point to Bitcoin's outperformance, and you don't have to stop there. We can talk about fine art. We can talk about old Porsches. There's a number of asset classes that have taken gold's lunch here.
Very interesting thoughts. I want to talk about the gold to silver ratio because it's very high right now. We're currently sitting at around 86 ounces of silver for 1 ounce of gold. The mean average ratio since 1970 has been around 54. Do you think we'll see that gap close soon?
Well, listen, I'm starting to hear the most staunch silver-centric bulls start to capitulate and start to throw in the towel and start to talk about how we won't, the historic relationships won't go back. And it tells me that we are closer than we've ever been to that relationship normalizing. And, look, 54 to 1, you talk about where that relationship has averaged. I go back to look, I think about it in the sense that gold is, everything that we've ever mined is still with us, whereas the silver gets consumed. It doesn't get recycled. And I sound like a bit of a broken record here, but if the natural relationship is 16-1, the mining relationship is 7-1, and the gold to silver ratio is closer to 90-1, something's out of whack here. And again, I just think that we're getting to a point with the price of gold where at some point the central bank buying will ease up. It won't continue on this trajectory. And right now, gold has priced itself out of the average buyer's hands. And it always has been historically, but it's on a relative basis. And it's why you see the masses in India, in China, going to silver. And this is where the real demand we've had zero demand out of the West for these metals, zero. We're starting to see a little bit come in recently in the last couple of months, but really what's driven these prices, I think, since 2000 has been Eastern buying, and it's been central bank buying, and now we're starting to see it go on to Main Street in India, in China, and if we look at Q1 of this year on silver, 35% of silver demand came out of China, and it came out of solar. So a third of the market was taken up by those two entities.
When we look to the silver mining space, it seems like a place at this moment in time where a lot of people are hesitant to deploy capital. I think there's just so much value there waiting to be realized. Even when we look at the gold miners at this point in time, aside from the majors, we haven't seen huge moves in the developers, in the junior mining stocks, the explorers. But when it comes to silver in particular, when looking across the silver mining space right now, how do you see the health of the sector? Do you think it's extraordinarily undervalued at this point? Obviously, I'm asking the CEO of a silver mining company. I can already hear the comments being typed in response to this right now. But what are your thoughts on the silver mining sector at present?
Well, look, I think there's a number of ways to look at it. Number one, you could argue that the miners were more profitable in 2020 than they are today, that the margins were better. I think the numbers are, 48% margins versus 40% margins if you compare the two periods of time. So you could argue that gold mining was more profitable 4 years ago with a gold price that was $400 an ounce lower than it is today. And so, and maybe that is an explanation why the equities haven't performed as well as the metal. That's one way to look at it. But in terms of answering your question about the health of the industry has never been healthier from a standpoint of this is an industry that now across the board pays a dividend. It's run exceptionally lean. The production profile is strong. So, look, I think that you need to be a stock picker. You need to follow management teams and groups that have been successful. A great example is a deal that was announced a few weeks ago, OTCQX Mining. There's a group with Brzezinski and Ruzin who have on multiple occasions, whether it was the sale of the Malartic asset or this recent sale of Windfall, they're doing it time and time again. And if you're an investor in the space and if you're in the right companies, I looked in our neighborhood in the Golden Triangle, just a little north of our project, to an analog project called SK Creek, owned by a company called Skeena Resources. The week the OTCQX deal was announced, Skeena went from $7 a share to $11 a share. It was up about 50% in a trading week. So if I don't know where else you're going to make 50% a week on planet Earth. So this is a time where if you can identify which projects are next, and the bet the market participants are making is they're moving from one takeover candidate, OTCQX Mining, to the next potential takeover candidate, Skeena Resources, the trickle down of funds. This is an industry that price isn't the only thing that's driving value in our sector. And this is what investors need to understand. Discovery and profitable mining also drives value to the bottom line. A great example of this is a company called Kirkland Lake with their Swan Zone in Australia. That Swan Zone drove $1.2 billion of value to one of our investors, Eric Sprott, and that money was then deployed throughout the industry, moving a lot of projects forward, including the $20 million Eric put into Dolly Varden to advance our Kitsall Valley project. So I think it is a stock picker's market. And, we've seen incredible growth from the large cap gold companies. I'm a shareholder of Newmont. Companies trading at a 52-week high. It's record earnings. Agnico Eagle, same thing. So the gold miners are performing extremely well. Gold's at record highs, but I think we don't have the breadth, right? It is selective to a few names, and the capital is there plentiful for a few names. I'll give you one example. We put up a deal. We announced it on the 19th. We announced a $25 million deal, which for a company our size is just under the 10% dilution mark. We're a $300 million company. We put up a $25 million deal. We could have closed on $75 million. That was the demand, right? We ended up trying to be thoughtful and being sensitive to dilution. So we're looking to close on 32.2. But for the right stories, there is record amounts of capital on the sidelines ready to go in. But, the problem that we have is there's a ton of orphan deals that are out there that are struggling, that the investing public is uncertain if they're going to get the needed capital to advance their project.
Well, I want to dive into the recent financing in a moment, but first I want to just get your overall view on how Dolly Varden Silver fits into the whole silver mining picture. How does Dolly Varden plan to capitalize on all the bullish macro silver fundamentals we've just been discussing?
Well, look, I have a vehicle for speculation. That's what Dolly Varden essentially is, right? That's what every equity is. And essentially the company, if it does nothing but give investors exposure to a rising silver price environment, and I experienced this in gold mining in the 2000s where, my mentors and my bosses said to me, Shawn, you could sit on your hands and do nothing, and these equities are going to go wildly higher. And the same is true for Dolly Varden. And the reason for that is Dolly has a past producing project that has a resource. Now, we've opted not to sit on our hands, Jesse. We've opted to be very active. We've raised $122 million in the last 4.5 years. We've grown our resource count significantly. So we're now giving our investors exposure to a lot more than just the historic ounces that were left behind. And we've done that through acquisitions and discovery. So how I'm trying to get Dolly Varden to fit in is I had a vision for the company. And the vision was I wanted to take this name that was an obscure, irrelevant, small name, and my goal was to make it a top 10 silver equity. And I'm happy to report it's a top 30 silver equity today. So we're on our path to that goal of top 10. Well, how are we doing that? We're doing that by growing economic, high-grade, safe jurisdiction, mineable ounces. And so the vision here is as the silver price continues to move higher, and I'm wildly bullish of where we're going to end up, the enterprise value per ounce, the in situ value, the value of those ounces that were identified will go higher. We've already seen it happen. We've already seen multiple 100% increases in the in situ value in the company, and we've seen multiple 100% increases of the mineral inventory. You factor those two things together, and that's why the market cap of the company has grown from 20 million to 300 million. And so how I'm trying to position the company is I'm trying to create a bank of silver in the ground. And Jesse, when we have that moment, when we have that spike and it's coming. It always happens. It's happened in every bull market in the history. We're having another moment, and what's going to exaggerate this one is the pickup in industrial demand. At that point, let's turn on this project. Let's get it back into production. It was a mine. I think it once again will be. Now, there's multiple ways that we can do that. We can sell the company. We can develop it ourselves. But in the meantime, let's continue to grow that mineral inventory. So that's how we're positioning to benefit ourselves, our investors, and our stakeholders from the coming bull market in silver.
You released some drill results this month from the Wolf vein. So first, walk us through the significance of that part of your project. And then if you could break down the drill results for us and what they mean, that would be fantastic.
There has been a lot of work done in the neighborhood over the last 130 years. And all that work, the more time you put into something, the more you understand it. And our understanding based on Eskay Creek and Premier and Bruce Jack and Red Chris, we know where to look for mineralization. We know, we call it the red line theory up in the Golden Triangle. And it was a theory that was developed by two very smart BC geological geologists, Jeff Kaiba and Joanne Nelson. And what they looked at was within the 2-kilometer unconformity of two ages of rocks is where the fluids came up and where the deposits were formed. And so we know where to look. We know there's a repeating pattern. And where this is playing out on our project today is at the Wolf deposit. So the Wolf deposit is located about 1.5 kilometers away from Canada's third largest silver producing mine throughout the 1950s, the Torbert mine, which we also own, which we have a mineral inventory of almost 40 million ounces just at Torbert alone. So 1.5 kilometers away, we try to test these theories, okay? Theories that we've brought in, theories that others have had, and what we found is the silver mineralization is growing at a certain plunge, a certain dip, a certain periodicity along a contact, and we've been hitting it at an incredible rate. So what we're finding is we're finding 20, 30 meter wide high-grade silver mineralization. We just had a report out on the 12th of August where we drilled over 9 meters of over 1,000 grams of silver, brand new. When I talk about the 64 million ounces of silver that we have and the million ounces of gold we have, it doesn't factor in these new discoveries. And then we had another hit on the 19th of August where it was 16 meters of 600 grams. So the bottom line is we've got this Wolf deposit. It's growing. And what it's growing, Jesse, is a unicorn asset. It's growing a primary silver mine in a safe jurisdiction. Primary silver mines make up 28% of the market. Most silver gets produced as a byproduct. So finding a primary silver mine is super rare. Finding it in a safe jurisdiction is next to impossible. There's just a handful of these, and we happen to have a very large, very robust one.
Let's talk about the financing. You recently raised it from 25 to 28 million. You're saying now you're looking at closing on 32.2 million, I believe you said. Eric Sprott taking part. Walk us through the details of the financing and how you plan to put the cash to work.
It's a really good question. This financing puts us in a position where we don't have to go back to market until 2026. So think about this. We're a silver growth company, okay? We have no warrants. We have no debt. We've got some great shareholders. Eric's at 10%, Hecla's at 15%, Fury's at 19%, institutions at 48%. So you have 8% in the hands of the public. You've got a company. I just laid out a case of where I think silver's going and when I think it's going there. So my case for silver is between now and December of 2025, between now and next December, industry is going to consume all the silver that we mine. So the investment demand, where are we going to get it? It's going to have prices have to go higher. They have to incentivize people that hold silver to give up their silver. Well, Dolly Varden, Jesse, doesn't need to print a share until we get into 2026. So for you as an investor, you've got a company here that's fully financed. I'll be going down to Beaver Creek and Denver Gold with over $40 million in the bank. And we've got a very aggressive plan over the next 2 years where we don't need to print another share. And so any growth that we have to the mineral inventory or the price of silver moving higher is not going to be absorbed in any dilutive financing. We're fully financed. And I think that's a differentiator, and that it puts us in a different class of company. We're going to grow. We're going to be lean. We're going to make discoveries. And I think listen, Dolly Varden is the culmination of a 20-year career, of 20-year relationships. And it's taking everything that I've learned, every mistake I've learned, and trying to maximize what I think is a once-in-a-lifetime moment in silver, in precious metals investing, in commodity equity investing. Commodity equities have never been more inexpensive relative to commodity price in history. So I think this is the greatest value opportunity for the investor. And I think and it's not unique to silver. We've seen it play out in other commodities, most recently uranium. But I think this move that's coming in silver is going to be like that move we had in uranium, but only on steroids. So it's an incredible opportunity. Gold's leading the way, and I'm wildly bullish. And if you go back and if you look at some videos that I put out in September of 2022 or September of 2023, and you look at what our share price has done, we were 40 cents a share in 35 cents a share in September of 2022. We're over $1 a share today. We haven't done a down round of financing. We've accessed capital. We've made discoveries. We've grown the mineral inventory. The team has executed, and now we're moving into a market that I think it's rewarding Agnico, it's rewarding Newmont. It just went down market and rewarded Osisko Mining. It's rewarding Skeena Resources. I think we're next.
Well, let's talk about upcoming news flow and catalysts. What can investors look forward to for the rest of 2024 and moving into 2025 as well from Dolly Varden Silver?
So listen, we've had a history of making acquisitions. We acquired the Big Bulk project last December. A year before that, we picked up Homestake. These have been transformative. These have been accretive. This has led to the big growth in the company. We've also had a track record of making discoveries. And so, look, we've got drill results pending. We have been monitoring some regional acquisitions. And so watch for us to continue to grow, right? And I just got to shout out my team, whether it's the technical team, the communications team, the board of directors, the advisors, the shareholders, the stakeholders. Dolly Varden is running like a well-oiled machine right now, and we've got a lot of drilling. We've completed over 50 holes. We've only put out a handful of results. So drill results, and drill results have driven the value of the company. And so that's what's coming up. But also look for us to continue to evaluate and execute on M&A opportunities.
Fantastic. Well, as the final question, I want to just open the floor to you. If there's anything we haven't yet discussed when it comes to Dolly Varden, or maybe that we have that you think is worth touching on in a deeper dive, hit us with something you think potential shareholders should be aware of when it comes to the company.
Look, I think that just judge us on our past. Look at a 5-year chart. I've been here since February of 2020, and we've gone and we've navigated some turbulent waters. We were here when silver went to $11.94, and we pulled off acquisitions. We were here when silver went through 30, and we raised money. We're very sensible. We talk to our shareholders. We talk to our investors. We talk to our local communities. We have a team that we empower. And so at this time, when you've got a 90 to 1 silver to gold ratio, and history tells us that should reasonably be at 30 to 1, if not 20 to 1, what company do you want to be positioned in for that coming move? Do you want a low-grade open pit mine in Mexico, or do you want a high-grade, minimal disturbance, past producer in the Golden Triangle?
Great. Well, I'm going to put a link to the Dolly Varden website as well as social media for people who want to follow the company more closely. It's always great talking to you, Shawn. You have a real clear passion for your craft and a passion for the silver sector. It really comes through. So thank you so much for coming on the show once again and sharing your knowledge with the audience.
Thanks, Jesse. Thank you so much.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.